All right, welcome back everybody. My name's Austin. Today we talk about the most recent Bitcoin news, update for Synthetix network token, Cardano, Elrond, the data breach that just happened for the Ledger wallet. And like always, this is your one-stop shop for the latest cryptocurrency news online. Our top story of the day, multi-trillion-dollar investment firm Fidelity has just called Bitcoin an aspirational store of value and an insurance policy, sending that message out to its multitude of customers in the investing space. Here's the report right here called Bitcoin Investment Thesis, an aspirational store of value. This just came out, and let's be clear, this is from Fidelity Digital Assets. So it's not from the main Fidelity, but it is from Fidelity Digital Assets, a subsidiary of the multi-trillion-dollar investment firm Fidelity Investments. But check this out. The report, Bitcoin Investment Thesis, an aspirational store of value, notes that Bitcoin does meet the basic test for being considered a store of value, but hasn't yet achieved that status. Let me share with you the exact quotes. And by the way, this is something that we talk about all the time. Right now, we are here. Anything in human history that eventually becomes full global money starts off with scarcity, immutability. It starts as a collectible, in this case a digital collectible, right? It's traded around with no real value. Eventually the network effect grows. It becomes a reliable store of value. We're getting there with Bitcoin. Then a medium of exchange, then a unit of account, then a full global money. And we're still early. This is essentially what Fidelity Digital Assets is saying. Bitcoin can be described as an aspirational store of value, creating value as it matures into a store of value. An analogy is that investing in Bitcoin today is akin to investing in Facebook when it had 50 million users, with the potential to grow to its more than 2 billion users it has today. Also, for the first time ever through Fidelity, Satoshi Nakamoto himself was quoted. It might make sense to get some, just in case it catches on. If enough people think the same way, that becomes a self-fulfilling prophecy. Satoshi Nakamoto is being quoted today by Fidelity. We are going to be talking about the SEC going after Binance, but to finish up, asking the question, why now? Why is Fidelity putting out this Bitcoin thesis, investment thesis, now? Well, because of the unknown consequences of record low interest rates, unprecedented levels of global monetary and fiscal stimulus, and deglobalization are all adding fuel to the fire of awareness and adoption for Bitcoin. Big step. As I get more information, I'll keep you updated. Next piece of news before Synthetix. Some of you guys have been asking me about this. You've seen some of our videos posted on here. A buddy of ours created the site onlyaboutbitcoin.com, and I just want to give him a shout out. This is kind of like Drudge Report, but for Bitcoin, specifically aggregated, curated news listing the best books, best articles, best memes about Bitcoin, podcasts, videos. Sometimes we make it in this category. So this is pretty cool. And for those asking, I'll put a link down below. It's refreshed daily. A friend of ours made it. Just something I thought was cool. Next piece of news. Cardano has just launched their Shelley mainnet. Here's what you need to know. And actually, Charles went live on his YouTube page yesterday. Listen to his pretty impassioned talk. I liked it.
But this is the Shelley era. We're no longer a static and federated system. We're a dynamic and decentralized system. And a goddamn army showed up to take over. You guys did. So many people from here on out going to be making blocks, going to be running this system. And every day we're going to get a bit more decentralized. And every day we're going to get a bit stronger, more resilient. And every day this network is going to grow like a weed. And you know what? No one can shut it down. No one can stop us now. Cardano's here to stay forever. And you know what? There are things to come, native assets, smart contracts. Boy, they're coming. And they're going to come with anger. And we're going to in 2021 have a lot of fun competing and a lot of fun showing the space what years of research can do. But today we showed everybody how to do proof of stake right.
This was a major step. The next big step is going to be smart contracts coming at the end of this year, but really in 2021. I'll keep you updated as Cardano progress continues. Next piece of news, the SEC wants to start scrutinizing Binance chain transactions. Another way to say this is the U.S. Securities and Exchange Commission appears to be gearing up for a closer look at Binance Coin, BNB, and other tokens on cryptocurrency exchange giant Binance's blockchain. Here is what we know today. The SEC disclosed in a Wednesday memo that it intends to award California-based Synthetix a single source contract on the grounds it is the only blockchain analysis firm capable of tracing Binance chain transactions. So right now, to be clear, this isn't necessarily bad for BNB or good for BNB. It's just that the SEC is saying we're going to start monitoring. Now, according to what the SEC, the securities watchdog, said in the contract description, Synthetix products are right now the only known blockchain forensics and risk intelligence tool that can support BNB and all tokens on the Binance network. And now the SEC is contracting Synthetix. Now, where this gets weird is that Synthetix, actually back in November of 2019, Synthetix partnered with Binance to bring anti-money laundering tracing tools to the Binance chain, which is good, which hosts the exchange's nearly 3 billion market cap cryptocurrency BNB, as well as 189 other tokens. So Synthetix has been partnered with Binance, but now the SEC is contracting Synthetix. I'll keep you updated. Next piece of news before Synthetix. The Elrond mainnet launches today, probably already launched, depending on when you're watching this, but this is coming after their testnet has hit over 260,000 transactions per second. Now, obviously a big deal. Some of you were asking about this. The launch follows the successful testnet results with more than 1,500 nodes in 29 countries and 50 shards, with obviously the extremely high speeds of 2,600,000 transactions per second. I guess the big question would be, what should we expect next? New tokenomics and DeFi app. The launch alters the token economic model by drastically reducing the token supply from 20 billion to 20 million. This over the next 10 years. Over the next 10 years, the issuance rate will gradually decrease from around 10% in the first year until no more tokens are issued. I guess me personally, now that the mainnet is launched, for me, can we keep seeing usage increase? Now, we have been seeing some good work up to the mainnet, but now the fun begins. An estimated 40,000 users have already signed up for the waiting list for the new mobile and web app called Mayor that will be integrated into DeFi protocols with a wallet, staking, and lending features. So I will keep you updated. Next piece of news, Synthetix network token. The Synthetix Foundation has officially been decommissioned. The protocol is now under control of 3 distinct DAOs, the Protocol DAO, the Grants DAO, and the Synthetix DAO. So if you're a Synthetix holder, what does this mean to you? Well, this is the leadership shifting the Synthetix network to be more autonomous and more decentralized rather than being controlled by a single foundation. And believe me, if any DeFi protocol truly wants to achieve mass adoption, decentralization will be the key. In the absence of the foundation, Synthetix will use 3 separate DAOs. There's the DAO protocol, which is responsible for checking for updates and configuring variables. There's the DAO grants, which serves to reward work within the Synthetix ecosystem. And then there's the Synthetix DAO, which manages and moves funds to various contributors and other projects. And all of this leading to the ultimate goal of this project, which is to build an exchange for censorship-resistant synthetic assets that is directly governed by you, the users, with minimal intervention by the team. Big step. Big step. And next piece of news, did you hear that yesterday Ledger, the hardware wallet Ledger's database was leaked? Your home address and contact info of your order is now out in the wild. Now, your funds are safe. This is all according to the press release they put out. Your funds, my funds, are safe. As you know, Ledger is one of the wallets that I use. It was just your personal contact information that was breached, potentially. Actually, there was 9,500 customers whose detailed personal information was exposed. And if you're wondering, was I exposed? Was I not exposed? They say that you will receive a dedicated email today and share more details with you. Not a good look for Ledger, but I mean, it happened. And how the hackers could use this data is be very aware of phishing emails saying, hey, we're the Ledger team. Type in your key phrase. Hey, we're Ledger. Send us your private key information. Never do that. But with this information, it would make it easier for them to try and get you to do that. So just be aware. Now, Ledger competitor Trezor, in an opportunistic yet brilliant marketing technique, tweeted this out yesterday. Fact of the day. After 90 days, we get rid of all sensitive data about your order in our e-commerce database, even email addresses. Word of the day, data privacy. Use this promo code for a 10% discount in our shop, limited to just 9,500 people in 48 hours. So this is still going on, 10% off a Trezor wallet who won't keep your data after 90 days. All right, that is the video. My name's Austin. See you tomorrow.